Hello and welcome to the first episode of Space World News. The Canadian dollar edged lower against its US counterpart on Tuesday as a drop in oil prices offset optimism that a deal to raise the US debt ceiling would be passed by Congress. The loonie USD CAD was trading 0.1% lower at 1.36 to the greenback, or 73.53 US cents, after moving in a range of 1.3568 to 1.3613. Under the hood, in terms of fundamentals, you have got yield spreads giving it support, and then weaker oil prices moving against it, said Eric Thieret, global macro strategist at Manulife Investment Management. The price of oil, one of Canada's major exports, settled 4.4% lower at $69.46 a barrel, as mixed messages from major producers clouded the supply outlook ahead of the OPEC Plus meeting this weekend. US bond yields fell as worries receded that the United States would default on its debt, while the gap between the Canadian 2-year yield and its US equivalent narrowed by 5.6 basic points to about 20 basic points in favor of the US bond. The moving yield spreads came as investors awaited Canadian first quarter GDP data on Tuesday, which could offer clues on the Bank of Canada policy outlook. Money markers see a roughly 30% chance the central bank would hike next week for the first time since January. Data on Tuesday showed that Canada's current account deficit narrowed to 6.17 billion Canadian dollars in the first quarter from an upwardly revised 8.05 billion Canadian dollars deficit in the fourth quarter. The Canadian 10-year yield was down 6.3 basis points at 3.268%, tracking the move in US Treasuries. SWN